Hello, traders. It's 8:03 a.m. Excuse me. 1 second. Hello, traders. It's 8:03 a.m. Chicago time on Wednesday, the 26th of February, 2020. This is episode number 1700. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Today we're seeing a little bit of um, uh, balancing and slight recovery. There was a drop, a pretty significant drop overnight. The overnight low in the S&Ps is a lot lower to 3091, about 50 some odd points down, 53 points down from where we are. The overnight high is only about 15 points higher in the S&Ps. And I'm going to talk about the stance of the market here in a bit. The Russell's leading the pack, only up by 9 or 10 points, up 0.63%. The Nasdaq's up 44 points or 0.5%. The S&P is up 11 and a quarter points, 0.36%. I mean, 11 and a quarter points is something the S&P can neutralize in about 30 seconds in this environment. So that's where we stand. Crude oil's off, trading at 49.53, below the 50 figure yet again. As I'd put into the head trader channel in Convergent Chat, I said that expect something from OPEC on that. Gold has simmered down, is off 13 points or 0.8%, trading at 1637. The market is pulling money out of safety, and it has a slight risk lean coming into today's market. There's a lot to digest here as more cases came out of Italy. More cases came out of Italy, out of South Korea. A new announcement, a new country getting taken into the fold here with Poland and France, and yesterday Spain. First case found in Barcelona, my favorite city in the world. Bahrain is announcing more cases. Kuwait is announcing more cases. The airlines are having to adapt, so the transportation sector is likely to take a hit here, and so on and so forth. Italy is really on the map for Europe, and Iran is announcing more cases as well. And in those regimes where the flow of information is not all that great, like China and so on, I would suspect that the actual cases are much worse. You know, a lot of these sectors, financials took took about a 3.5% hit yesterday. Transports took almost a 5% hit. Industrials 4.5% hit. Techs 4% hit. This is fairly significant. The gap and go situation here is something we haven't seen in some time, and this movement is certainly not a typical buy the dip type of drop from what I can assess based on my daily charts. So that's where we stand in terms of what's on schedule for today. There was nothing that is high tier that took place overnight. Consumer confidence out of France and numbers like that. Lagarde, ECB's president Lagarde, is speaking. The Eurozone is pricing in a rate cut. And we'll see how that goes. New home sales are due at 9 Central, 10 Eastern, expecting 1.9%. The market continues to be hot in homes. And then we get crude oil inventories for those energy traders at 9:30 Central, 10:30 Eastern. The expectation is for a surplus at 2.005 million. looking for a draw on gasoline of 2.245 million and distillates a draw of 1.713. Fed's Kashkari at 1 Eastern, and that's pretty much wrapping up the day. Let's take a look at what was expected yesterday versus what we got. But first, I want to let everybody know that tomorrow the treasuries roll to June. So just be aware if you're using, a feed that does not automatically backfill the adjusted premium. Tomorrow you'll want to reload your data for U.S. Treasuries, the bonds, the notes, the fives, the twos, and so on and so forth. So tomorrow we're starting our roll into Treasuries, and then we have expiration on this current contract, or rollover on the U.S. contracts on March 12th. March 12th is when we roll forward in the U.S. indices. So that's what we're looking at. On the review segment, the primary scenario, given where we ended up on Monday, the primary scenario for yesterday is a very likely test down into the 27, 28 area for a bounce back up to the 53 area and then a potential grind up. It looked like the market was stabilizing. And that's the clues for that are in the profile, double distribution profile. We're in the upper distribution, and I expected it to test down and back up as the higher probability play. And given the push back up, the expectation is for it to grind its way back up into the gap. This is the buy the dip kind of scenario that we've been used to for the last 4 or 5 months. The secondary is what actually ended up working out. The secondary is a push higher into the 48, 49 area. That's the value area high, and then a rotation down to the point of control, which was at 2650. Consolidate there, and then just let go beyond there. And start moving towards the 3,200, specifically 31.99 and a quarter. 31.99 and a quarter is a micro composite point of control. It's the next balance zone, and as I said, there's some volume right there. There's a little bit of volume there, and I expected that to kind of hold for a bit. Here's what actually happened. It's really hard to track the market on a short time frame chart. So let's zoom in here. There's the push up. So that was spot on. Remember yesterday I said 48 is likely the area to test up before it turns over and rolls. Again, here's what I showed, right? Push up to the 48, come down to the point of control. This is the point of control. It's this maroon line, and consolidate. See this consolidation here. Attempt to push higher and then break. And once it breaks out of that consolidation, we expect it to run. And that's exactly what happened here. Not that I want to be right. We don't get paid to be right. We get paid to just follow the plan. The edge isn't just following the plan. There is the consolidation at the prior point of control. And then boom, it spills the beans. Pulls back to the prior day's low right here, and then the market gets well ahead of the mid and VWAP, and so what we have is a trending market, and it becomes a price action based trade, and so we start to look for pullbacks. I did I did a trade talk for Convergent at about this area here, and I talked about the 76 short with a scale in at 80 and potentially 83. Not a trade recommendation, but that provides a pretty decent setup on a pullback to continue with the range. Again, the distance between the mid and the current pricing tells me that the higher time frame is in play and is running away. It's running away from those from retesting, and so that was the setup there. To push lower, we did take out the 3,200 right in here. There wasn't very much of a bounce, and then from there it just could not contain itself. And And we ended up with a trend down day type with a point of control at the lower end of the range. Those of you who've been following for some time have probably heard me say this, that when we finish the day with the point of control at the end of the range, it simply says, and again, the market's an auction, right? You can mathematically kind of describe the market or whatever, but it's more valuable to me to look at the auction for what it is, what it's doing. And the way to describe this action is we end up pushing into the a time-based limitation with the close of the RTH session or the pit session, and then the market starts to cover. Margins have to be met, and so we get this buying spree into the close. We often see this, but with the point of control shifting to the lower end of the range, it simply says that the market's accepting lower prices. It is, there's no volume that's created without buying and selling. For every buyer, there's a seller. There's never, ever, ever in futures more buyers than sellers. Never happens, because a contract is generated from thin air, essentially, because there's a buyer and a seller. And if that's the case, and the market's accepting these lower prices and shifted the point of control, which means that the most volume traded for the day is right there. That's the point of control. That's a 31.28, and then it runs out of time right here. And if it ran out of time, that means that there was no bounce. It did not find its buyers, most likely. Did not find its buyers, and therefore we expect it to kind of spill forward as the market reopens. We expect it to at some point spill forward until it does find those buyers. Okay, so that's the summary of yesterday. One of the biggest things to take away yesterday is the delta. So let's look at that on the 15-minute because there's a lot of noise on the tick chart. Look at this delta. This is the delta bar right here. Look at these bars. Don't look at the histogram. That's just the delta histogram. Look at these bars. And what these bars are saying is price is accelerating to the downside, but the delta is not. A better demonstration of what this looks like is this. So you have the S&P minis at the top, and what we've done, taking accurate tick data, consolidated tape-based reading on IQFeed's data feed, which is very high-quality data feed. What we've done is charted the delta. Okay, so the delta is the volume delta is for every contract that buys. You have a +1 for every contract that sells. You have a -1, and this is just the summation of that. What we see is after the market breaks lower, what we see is very large participants, which here are defined as 100 lots or more, 100 lot traders or more, were selling the crap out of this market, stabilized, and then they continued to sell later in the session. They were sellers. Large lot buyers were active through the entire session. Large lots are 10 contract trades with a single tick ID, meaning that's just one order. 10 contracts to 99 contracts were buying on the way down. So as the market was moving down, large lots are buying, very large lots were selling, and you and me, the small guys, were just doing very little in this action. Okay, and what this is saying, and when you accumulate these together, and let me see if I can fix this because it's pretty bad. Let's see. Yeah. So what we see is price is moving down pretty dramatically. It doesn't look so dramatic because of the scale here, but the delta is sticking around the middle. Remember, delta is at 0 at the open. So the open was 32.40.50, and price at this point right here, price was down almost 100 points, and the delta was at 0. What is that saying? Two potential things. One, the market's very thin, and therefore the sellers are hitting the bid, but there's not much volume there, and therefore the delta is not moving dramatically. But still, if they're only hitting the bid, then we'd still get a pretty even, pretty consistent negative delta with price. The alternative is what this may be saying is as the market is pushing down, it's being lifted. There's buying at lower and lower and lower prices that exceeds selling at lower and lower prices. Doesn't mean there's only buying, it just means the buying delta, the difference between them is net positive for delta or stable for delta versus price. And what this is telling me, and I did spill a little bit in here, once we got below 3150, there was quite a bit of selling. You could see that there's quite a bit of it was very large lots, again, 100 lots or greater, and the large lots started to participate at this point. But immediately, once it stabilized, the large lots come right in and really rally this up. I mean, these are big numbers. We haven't seen this big a number for large lots in a long time, over 30,000. We haven't seen that in a while. What does this all mean? Ramble, 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 right? At the end of the day, we finish with a delta that's pretty much at zero, with a market that closed 100 points lower. Okay, and what this is saying to me, looking inside of the bar, inside of the candlestick or whatever, just I have to look at the market holistically rather than just little pieces. What this is saying is there's a strong potential. There's a strong potential that the selling is likely to be exhausted at this point. So unless new news comes out, let me remove some of this noise. Unless new news comes out, this market is expected to stabilize. So what I'm expecting for today, since this is an impulsive day, we are likely, but not necessarily, we're likely going to push the 17 and a quarter and test below, because a confident buyer would step in more confidently once they've seen that they've tested below the low and there are buyers there. We kind of did that overnight. We had a big move overnight and a big pushback, a V bottom overnight, but I'm expecting the market to stabilize, and the expectation is the market is likely to stay in range today and hold steady. Okay, and that's likely to push the delta even higher. I'm expecting the buyers are likely to step in today to continue to stabilize the market. That's all I'm saying. And what does that translate to in terms of when I click, how I click? All that's saying is, look, yesterday, given scenario two, given the expectation and given the bounce that we had the day before after a big gap down, yesterday was expected, big drop, okay? Not 100 points, but a big drop nonetheless. Remember, the weekly range is around 52, 54 points per week, and we covered that pretty quick. Today, so we compressed the short side pretty good yesterday, so you can come in with a strong sell bias. Today, the strong sell bias may not be, I'm not saying it isn't, but may not be beneficial. So caution, an early warning, not a caution, but an early warning to bears today. Likely to get sucked in to what looks like a continued drop, but most likely the market is going to turn choppy with wide ranges. So it's a scalper's paradise potentially today, and a likely bounce. The market is more likely to push the 3158.50 for the overnight statistic, which says, historically speaking, on over 2,500 samples, the market is likely to touch the overnight high or the overnight low 97, 98% of days in the ES. Past performance not necessarily indicative of future results. I know I'm rambling here, but this is really important because what I'm conveying here is a potential change or a bit of a slowdown, at least pending more news, a bit of a slowdown on the sell side. So be cautious if you want to come in here today and just hammer away on the bid. You may not see the good fruit for your labor. So what does that mean? Here's the drop. Here's the quick drop on Bookmap. This is ctbookmap.pro. Here's the big drop, and then you can see the nice V bottom here, and then comes right back. Okay, comes right back. We're above the overnight point of control. We're above the close from yesterday. This is relatively significant, and we're pushing up against this liquidity that's sitting up here, and we're likely to continue to push higher. We're likely to continue to push into that liquidity on the session, which means we're likely to take out the overnight high with a pretty high probability. Okay, and so as we look at the liquidity in the markets, we can see what's on offer, and we can see that it's been a lot of this is market maker action. You can see the liquidity is just following the price action, right? So it becomes really obvious. I love these markets, these volatile markets, because it's more honest in my opinion. So 3150 is a major strike. It's going to likely have liquidity in it, and there it is, voila. And then below us we have some liquidity in the 3100 area. Again, this is delta hedging and all that stuff. Remember, expirations every Friday. And so this morning, just look for it to float upwards. Given that what we've done overnight, it's not likely to move and continue to move lower, but we'll see. Yesterday's low is 31.17 and a quarter down here, 17 and a quarter right in here. May test that to complete the impulsive move down to start stabilizing the markets. Generally don't sell off big and then rally big. We've seen it kind of a little bit, but really it's caused by central bank injections, things like that. Generally, the market sells off, tries to continue, stabilizes, balances, sucks in some sellers, and then blows them out on the other side if it's going to go turn. So let's move on to what we're expecting for today, because I'm running out of time. The stock zone areas that I produce every morning for myself, which I now share with Convergent members, aren't very useful in this environment. In fact, any kind of when a higher time frame is in action, any of those levels, like, hey, I've got a line here, they don't care about that. So I'm not going to show the stock zones here. The primary scenario is an expectation. Since we are opening in the high volume area, the expectation is an open auction that's likely to drift lower, consolidate. There's a potential for a test underneath yesterday, but in either case, I'm expecting it to continue higher, consolidate, and grind its way up back into the 76, potentially 90 area. I wouldn't be surprised if it gets to 3,200 again to test this high volume node up here, but this is what I'm expecting on a primary scenario today. I'm expecting the market to stabilize somewhat, given the information that we have, the details that we have in terms of what volume is doing as price is moving. Price is king, but volume's got to come along. You can run off and do whatever you want as a married person, but if your spouse is not into it, it probably isn't going to go very far, right? So it's kind of like the same kind of concept or analogy to the market. In terms of scenario 2, expecting an open grind and then push up into the overnight high, push into the 3176 area, consolidate and hold steady for a choppy market today, probably frustrating both participants. Secondary scenario. Given that it's an impulsive move down, we have scenario 3. Scenario 3 has a potential for a test up, open, consolidate, test up, and fall, and then continue lower. This is the scenario where the market just doesn't believe the coronavirus is priced in. I don't know if it has or hasn't. I'm not a doctor or whatever, an epidemiologist, to know what the heck is going on there. But these are the key 3 scenarios. Good luck. This ran way over, but there's a lot going on. Hopefully you've gained something today. Cheers. I'll catch you tomorrow morning.